Regular viewers know that I'm a big fan of breakups and a big fan of the new experiential economy, where younger people only like to spend money on things that look good in a selfie or GoPro selfie. So I have to say I was pleasantly surprised yesterday when Wyndham Worldwide, the world's largest hotel company, think Ramada, Days Inn, and the top purveyor of timeshares and vacation rentals, meaning it's as experiential as it gets, announced that it's breaking itself up. Sometime in the first half of next year, Wyndham's going to split into a hotel company and a separate timeshare company. I think that's a very smart move. Marriott already did something very similar, and you know we have had them on many times, and it has been a terrific performer. I bet Wyndham will be no different. Plus, the company reported a nice top and bottom line beat yesterday. Management also boosting its full-year earnings guidance. And while the stock initially rallied in response overnight, it sold off going into the close, but I think there's a lot more room to run. Let's take a closer look with Steve Holmes. He's the chairman and CEO of Wyndham Worldwide, who's planning to serve as the chairman of the board for both companies after the spinoff. Hear more about the quarter and the impending breakup. Mr. Holmes, welcome back to Mad Money. Good to see you, Steve. How are you?
Good to see you.
Have a seat.
Thanks
well,
very
first,
much.
I'm going to be like the analysts. Congratulations on an amazing run, because if you're going to be chairman, you won't be a CEO of either of the new companies, but you got your shareholders there, and it's been a remarkable run.
It's been a great run. We have phenomenal people supporting the business internally, and we really have put up great numbers and have performed well and been able to return a lot of our capital to shareholders. So, so we feel good about that.
Unbelievable win. Now, I want people to understand, because we've seen each other other times, and I have said, well, look, I understand if I go to a hotel and they want to show me the timeshare, that's an easy win. Explain to people the strategic rationalization for splitting them up.
Well, we didn't have that connection that you're talking about that some of the other companies did. Most of the companies, hotel companies that were in the timeshare business, started off as hotel companies and then added timeshare. We were a very large timeshare company, and we had hotel as well, but the timeshare wasn't born from the hotel side of the business. So we had these two businesses that were never really completely connected. And over the last couple of years, we've been able to connect the dots. We call it the blue thread between the business. Wyndham Rewards coming in and really making a difference and being the top-rated loyalty program. Right. I mean, we've done things that have allowed us to get to this point. And I think that it's going to be great for the businesses. I think their focus on energy and focus on their part of the business will be great.
Now, I think you're coming in hot. At one point, the conference call, July, best month ever. At another point, 40% of the people who take timeshares are new people. So this must be hot in both parts of the business.
Yeah, I mean, our business is running on all cylinders. All three of the business units actually for us are doing great. Timeshare in particular, getting new owners is critically important. You need to have new people as owners, allow them to experience timeshare, and then they'll probably buy more. More than 50% of the people end up buying more timeshare. So we need to get that new flow. We had moved more to just the upgrade model. Now we're swinging back towards the new owners.
Wait, in the conference call, I was confused about one thing. You talked about having to review Europe strategically. Does that mean that maybe that doesn't fit, or does it mean that you want to do more?
Well, it really means that it's difficult to fit it into either the hotel or the timeshare business, right, because we want to have pure play businesses. The European rental business is a fantastic business. It's done extremely well. If you look at it over the last year and a half, the growth in that business has been remarkable. But the street doesn't really understand it. It's not a business that is as common in the U.S. Mm-hmm. Everybody thinks Airbnb, but really the managed rental business is a great business, a lower margin business, but a great business. And so in Europe, there's been interest in it before. We haven't pursued it. We're going to see what shows. If it doesn't, it'll go back to either the hotel or the timeshare business.
Good asset out there for optionality.
It's a great asset.
A lot of people felt that Airbnb would destroy our industry. Obviously, the numbers are unbelievably good. Why hasn't it?
Well, because Airbnb is a distribution model. We use Airbnb. We use HomeAway for our kind of shoulder season rental distribution. But we're on the ground, feet on the ground in markets like Denmark and Holland and the UK, where we provide services to the owner of the home, villa cottage, and that's a full service approach. That's different than just the listing approach.
Okay, I think that when we've had Marriott Vacation Worldwide on, I always try to get people to understand that these timeshares are sold. It isn't like naturally someone picks up and says, I want a timeshare. Why does it have to be sold, given that it can be a great economic benefit?
That is the ultimate goal, Jim. You're absolutely right. That's what we'd love to get to, where somebody decides that they want to buy timeshare and they go out of their way to find it. Right now and historically, the way the business has been built, we bring people in to learn about the product. We teach them about timeshare, and then they get interested in they buy. But as I said, the interesting thing is 50% of the people buy more. So it's a great experience. Right. They enjoy it, but it's that getting their foot in the door. And the purchase price is not what it would be to go buy a cup of Starbucks. So you're talking about a $20,000 purchase price. You need to get people really interested and engaged to take that step.
Now, you did, there is an element of like any large purchase where there are defaults. Are you okay with that rate of default that you have? Because it's obviously a growing business, but that's part of the mosaic.
It's part of it, but we're not happy with it. It's too high now. We need to get that down, and we've been working to get that down. We have the FICO scores are good, so we feel good about the customer that's entering, but we're not engaging them enough, quite frankly, and we need to get them more rabid about what they own, and that's on us to make happen. And we've got a lot of things that are moving to make that happen.
Okay. Lastly, how about you, Steve? You've been one of the great wealth creators who's come on our show, and I think you're too young to just be chairman. I'm surprised that, chairman of two companies is a lot of work, but do you have other things in mind?
Well, I do. I have a lot of things that I'd like to do. Right now, I've got a lot of work to do just to get the spinoffs done. After that happens, I can take a deep breath and see what I want to do. But I know you and I, Jim, have talked about philanthropic work and giving back in various ways. That is something that I'm very passionate about, and at some point I want to be able to do more than just give treasure. I'd love to give more time and talent to the cause.
You give yourself short shrift. I know how much time you've given to Bucknell and resources, so don't think that you're a check writer. You're an all-around guy, and I really thank you for coming on the show, and congratulations to Wyndham. That's Steve Holmes, Wyndham Worldwide's chairman and CEO, WYN. I think it'll have the same move that we saw from Marriott. Maybe better. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.